So Connor, we're going to look at a lot of investors going to be interested in this. Tesco, half-year figures coming out on Wednesday. What should they expect?
Yeah, easily the biggest company reporting this week. It's actually been doing pretty well this year. I think it was at a full-year high in mid-August. It's sort of pulled back since then from like 267 to just below 250, but still it's up like 15% this year. It's still doing very well given that it's 2018, retail sector, etc., etc.
Yeah.
All of the caveats that come with the stock like Tesco at the moment. Its figures back in June were very strong, first-year figures. I think it was its 10th quarter of consecutive growth. I think overall group like-for-like sales were at 1.8%. In the UK and Republic of Ireland, they were up 3.5%. Those figures boosted by the fact that it was the first time Tesco had included Booker revenue in one of its reports.
Yep.
I think Booker itself, like-for-like sales were up like over 14%, so it's obviously doing very well since it's been brought under the Tesco umbrella. Obviously, since then, you've had in September it announced Jack's, its sort of new discount chain to take on Aldi and Lidl. That actually did nothing for the stock, basically, in terms of its movement. Investors didn't really pay any attention to it.
Yeah.
I think obviously it's way too early to have any kind of substantial update on how that's doing. However, any kind of comments on how those first couple of stores have been doing, I guess, will be welcome from investors, even if it won't actually mean much, given that it is so new and still so sort of nascent in its development. In terms of what people are going to be wanting from the half-year figures, well, that second quarter period covers the heat wave and the World Cup.
Yeah.
So ideally, and on paper at least, there should be a significant boost in the second quarter that should lead to half-year figures that are ideally even above the sort of the 1.8%, 3.5% growth, for the group and the UK and Ireland respectively, for the half year as a whole, basically. I think that's why our clients are broadly buying around the 240 mark. Obviously, it's still up a fair amount this year, but it has pulled back from those 4-year highs back in August. So there is room for it to sort of bounce back in just above 250 without even getting near those 4-year highs, really. So I think that's why we've seen our clients buying around the 240 mark heading into Wednesday.
Okay, quite a bit of positivity.
Yep.
Thanks, Connor.